Hi, everyone, and welcome back to Signal Sips. I'm Dorian, Signal's digital content marketing specialist, and with me today I have...
Miah, and I am the consumer lending underwriter and team lead.
Today we're going to be spilling the tea on all things credit scores, including how to maintain a healthy credit score and some things to avoid impacting your credit score negatively. But before we get started, of course, I have to ask, are you normally a tea drinker or a coffee drinker, or are you a little bit of both?
So I actually have kind of dwindled down on coffee. I still absolutely drink it, but
Right.
but generally more on like just the weekend. But tea is my go-to every day, and especially at night because it really helps like calm me down before bed.
Right. Do you have like a specific type that you like to drink in the mornings and the evenings, or is it like a variety?
It's a variety, and my kids give me such a hard, like they will come over and turn off my kettle because they
No.
hate the smell of it.
Yeah.
So, but I really love oolong.
Yeah.
That's probably my favorite because it's just like a nice chill any type of day tea.
Right. Yeah.
So,
That's a good option for sure. I think my favorite's chai,
yeah.
like 100%.
So
And then
good.
peppermint tea at night, definitely, or just like chamomile.
Yes. So chamomile doesn't do much for me, but that peppermint.
Yes.
Absolutely.
Yeah. So we do have some options. So we do have, there's chai in there, there's vanilla caramel, and then also like green tea and a couple of other options.
I'm going to do green tea.
Sounds good. And then I don't know if you want like creamer or sugar.
No, I'm good.
Perfect.
Thank you.
Yeah, of course. And of course, I'm going to do chai. Welcome to Signal Sips.
Yay.
So I guess just to get right into things, can you talk about some practical steps that people can take to maintain a healthy credit score?
Yeah, so one of the biggest things that we tend to overlook, like we either go all in on like unsecured debt or all in on secured debt. So you've got like either lots of mortgages, auto loans, or title loans that some people take out. Or we go overboard on the other direction of personal loans, credit cards especially.
Yeah.
So more of like, or debt consolidation loans, stuff like that. So you really want to have a nice healthy balance of both of those types of loans. That way, whenever creditors are looking at potential loan options for you, you have a nice array of different payment types.
Yeah. Does that impact a person's like debt to income ratio, and like do creditors look at that too?
Yeah, absolutely. So the debt to income ratio is a huge thing. Every institution, bank, credit union, or just a regular creditor like Visa and all of them, they all look at the DTI, and essentially whenever you have too much of one, your DTI is going to rise. But also if you have like a pretty heavy mixture of both, that can really impact you also negatively. So you want to make sure that you're not taking out more than what your income will allow, essentially, which that's really complicated and confusing in itself.
Yeah, I feel like a lot of people, especially even with credit cards, will just kind of like see the option and take it, and then like not consider if their income will allow them to have multiple credit cards and loans and all that kind of stuff.
Absolutely. And what really triggers it most is because, okay, like great, you've been approved for that. Well, now you've got, just say your income monthly is like $4,000. Well, now you've got this credit card for $25,000 plus this other credit card you already had, and you're not looking at, oh, well, I only use it maybe for like $500 a month.
Right.
The creditor is going to look at, oh, well, you have the ability to utilize this, and then that's your monthly payment would be like $2,000, and then your now $4,000 monthly income has really dwindled down.
Yeah. I never thought about it like that, but that makes me kind of see my own credit in a new perspective, especially with credit cards.
Yeah, it's quite terrifying, actually.
So if somebody has a lower credit score, are there anything, is there anything that they can do to kind of give them a little bit of a boost?
Sure. So especially since COVID, of course, like some people, got the stimulus checks and like paid off a bunch of debt, but then they also went back and racked up debt because they were able to pay off so much. So low credit is like a huge thing right now. And it can be really terrifying. It can be really like soul crushing, and you think like, I'm stuck, I'm just never getting out of this. So one of the biggest things is to look for like secured loans or secured cards, or even like credit builders. Like here at Signal, we have the Fresh Start loan, which is fantastic. There's no minimum credit tier for that. Your DTI does have to be within a certain guideline, but it's that's really high, honestly. So as long as you're a member with us for at least 4+ months, because you have to have at least 3 months of direct deposit, that is a huge win for low credit scores. So I would definitely recommend that. But otherwise, just like secured cards, and there's secured cards out there that aren't like secured with your funds. So they're just like a prepaid card, but that creditor is still giving you the money.
Right.
So it generally has like an upfront fee kind of thing. So you know, whenever before you get the card, you know, you might have to, if you've never even utilized it, you have to pay $25 or $75 or whatever. But take those opportunities, because any type of new credit and good payment history is going to significantly increase your credit over the time.
Oh, okay. That's good to know that there are those kinds of options for people with lower scores. And then what would you say is like a good timeline for people to give themselves to kind of increase their score? Or is there like, is there any sweet spot, or does it really just depend?
Honestly, it depends on your credit and like how bad it is and what's hurting it more so than anything. I wish there was like, oh, within the year, absolutely, but no. You can go from a great credit score to a trash credit score in a matter of seconds. But to build it back up, it really does take a while and a lot of hard work and like focus, honestly.
That does sound terrifying, like you were saying earlier.
It is. Credit is wild, because we really, even if we understand it, we never fully understand it.
Right. Yeah. So. Like how it fluctuates, because I know even when I check my score some months, I'm like, why did this go down a couple points? Why did it go up a couple points? Like, don't really know overall.
Exactly. So yeah, and it can also be generated based on like your pay history and everything. So like if you know, just say this month you paid on, like, your bills due at the end of the month and you paid on the 5th of this month, well, you might see an increase in your credit score. But the next month, just say you pay like on the 20th, which is closer to the due date, you could see a decrease in your credit.
Wow, I had no idea. I'm gonna start paying my credit cards off earlier. Usually I like wait like halfway through the month, but now I feel like maybe I should do it a little earlier.
Absolutely. And if you do a 2 payment specifically with credit card, I mean, with all loans it's great, but with credit cards, if you do a 2 payment, so just say you make the minimum payment at the beginning of the month, and then after the 15th of the month you make a second payment, any amount. Generally recommend like looking at the interest so that you can pay that down. So just making it a second payment will kind of trick the credit system, and your score will actually significantly increase based on that.
Noted. I will be doing that like this month for sure.
It's great.
Yeah. And then what are some of the most common negative impacts to people's credit scores, and are there any ways that they can avoid those?
Okay, so it used to be medical debt, which is no longer looked at, which is very exciting.
Yeah, that's awesome.
Absolutely. Absolutely. Aside from that, it's really, of course, there's like the late payments or charge-offs or collections in general. All of that does hurt your credit, of course. We all know that. But honestly, you know, we've been taught that we need to focus on paying off that, like specifically if it goes into charge-off, that we really need to, before we ever do anything else, pay that off and everything. Well, 9 times out of 10 it went into charge-off because you didn't have the money, and you probably still don't have the money, especially with all like the new late fees and interest charges and everything else that have accumulated over that time before it was charged off. So I don't like to say realistically just let the account lie, but overall don't stress yourself about that. Just look for new opportunities, because that can honestly get you into more debt if you are focusing on paying off that specific account, because you know you're tying up all your money trying to save and this, that, and the other. So yeah, I would say like that's the majority of how people fall, or like there's an emergency that you had to utilize all your funds for kind of thing, and now suddenly you're falling behind on all of your, and it's bills in general. It's not just like credit cards and loans. It's like, you know, utility bills and everything, rent, all of that. And I know like some people, I think it's what, is it Experian who can like pull your, like if you have rent and stuff now. So if you have that linked, then, and you pay late on your rent, of course, that's going to negatively impact you. So it's good. Yeah. Pros and cons for everything, but late payments are definitely where the the downfall starts.
Right. Okay. Yeah. So avoid those like at all costs, and then
For sure.
let the charge-offs kind of just settle.
Absolutely.
Yeah. And then speaking of different credit cards and loans, what's the ideal balance of a person's credit mix?
So you definitely want a healthy balance of both. Everybody's credit is different. Everybody's income is different. So there's no like set, have like 5 of these and 2 of these or whatever, but just make sure that it's a healthy mix, and make sure that whenever you're taking out like the credit cards or the unsecured, and I go back to credit cards so much because like that's what majority of us have weighing us down.
Of course.
But make sure that whenever you're getting them, you're looking at really all the benefits behind them. So like the interest rates, the APRs, all that kind of stuff, how much, if you have an annual fee, what that card's actually doing for you and stuff. And make sure that, like I said, whenever we talked about the whole line amounts, make sure that you're not exceeding that. If you had to utilize that full line, you're not coming back and hurting your actual finances, because unfortunately they do have to be paid monthly.
Right, exactly. Yeah. I feel like it's not easy to get carried away, but when there's so much to keep track of, you kind of lose track of it. So I only have 2 credit cards, and I literally just got a new one, and I'm like, I definitely want to make sure I'm, keeping a balance and keeping track of everything and all the payments, because there are different payment due dates and stuff like that.
Absolutely. Yeah. And what you talked about, keeping payments and balances and stuff, you definitely want to make sure that if you are opening a card, you're going to utilize it, because opening a new card and leaving it stagnant is actually going to hurt your credit versus help it. So while the initial, of course, it's going to all new line apps will reduce your credit some, not like huge, but some. But then if you just let it sit there, it's really going to drop it.
Right.
The goal is to show good utilization. So like never really exceed half of the line limit itself.
Okay.
And then, of course, that monthly stable payment, because that's the monthly payment history is what really builds your credit. So showing that you can handle all of that plus all of your other bills is a real positive.
Yeah, that's good to know. I also learned in another episode of Signal Sips, like, never close your first credit card, because I remember, I forget who I was talking to, but I was like, yeah, I have this one credit card, but I don't think I'm going to use it much anymore, so I'll probably just close it. And I think it was some random person was like, never do that, or and last time on one of the episodes, they said again, like, don't ever do that.
Absolutely. And that's generally people's first go-to, because they're like, oh, it's old, haven't used it in so long, or like that's generally your lowest credit limit because you just never thought to increase it. Absolutely. No, that is your best, strongest credit line. So you always want to keep those. And that's what I was going to say. Also with like, instead of applying for this new card that looks shiny and new and fun, go back. And generally speaking, your really old credit lines probably have improved and have new like benefits that you don't even know about. So I would definitely recommend trying for an increase with that card prior to attempting a new card.
Yeah, that's good to know. How often should people be reviewing their credit report? I know we have an online banking credit score dashboard, so should people be looking at that like monthly, bi-weekly, or maybe even less throughout the year? Or what's like the sweet spot for that?
Yeah, so I'm really bad at that. I hate checking my credit. Even like my credit's not perfect by any stretch of the means, but like even if it was, I probably still would not check it all the time. They say that you should definitely, first of all, definitely check it annually. There you can pull your credit for free every single year. So if you do that in the middle of the calendar year, then just wait until the middle of the following, whatever. It's like freecreditreport.com. It's fantastic. But you're technically supposed to check your credit like every 6 months, or the terms like every 4 months kind of thing. So just to ensure that there's no fraud activity and make sure like everything's reporting accurately. So you're supposed to check it more frequently than you would think, but if it stresses you out, do not check it.
Yeah, oh my gosh. I feel like even in my case, sometimes I don't really know how to read the credit, well, not the credit report, because I get it like on my statement balance and stuff, but the credit score itself, like I was saying earlier, when it fluctuates, it's like trying to pinpoint where that happens.
Yes.
It's kind of hard to read, but with fraud and stuff, if people do find errors on their credit report, is there anything they can do to kind of like fix those errors, or are there any common errors that you would think people see?
So For reporting errors, first of all, if you noticed, let's just say Experian and TransUnion are reporting it accurately, but Equifax is not. So you need to report that to Equifax. You can do this. Every credit bureau does have an electronic reporting system at this point. However, if you still like the old days, you can absolutely type up a letter, report the account that's incorrectly reporting, why it's incorrectly reporting, and send that out to Equifax directly. And then you also want to send it to that creditor to make them aware, because it could be that the creditor has not updated their system, or it could be that Equifax hasn't updated their system. And just so you know, Equifax will also reach out to the creditor to ensure like their information is being reported accurately. So that's if you notice, just say like the account was delinquent, now it's current, not reporting accurately. Same process for any errors in general, but the ones that we see most common are what I just stated, or that maybe an account isn't even reporting at all. So generally speaking, if you open up an account within the month and it's after the 15th of the month, it's probably going to take about a two cycle period for the credit to get it. So meaning like the credit bureaus will update their information on the 1st of every month. Because it's after the 15th, sometimes it doesn't register on their like reports to pull for that month. So it may take a little bit longer. However, it could be that it never pops on there. And so at which point, I mean, that could be a good thing for you, but, but if it's not a good thing, then you're definitely going to want to reach out. And like I said, it's not always across the board. Like, you know, maybe Equifax and TransUnion are reporting accurately, but Experian is not, or TransUnion it's not. Like it's not necessarily that all three bureaus are going to have it incorrect.
Right. It's kind of like a miscommunication with one of them and then the creditor itself.
Yep, correct.
Interesting. Okay. I guess I never thought about the fact that one could be reporting the wrong thing and the other two could be reporting the right thing. So that makes me think that maybe I should start checking like all three of them regularly.
Yeah, absolutely. And that's at freecreditreport.com. They do show you all three reports.
Oh, okay, that's good to know. And you say you can check that once a year. Okay, good to know.
I mean, you can check it really anytime, but annually it is free.
Gotcha. Okay. And then I kind of learned recently about freezing your credit because there was some kind of like data breach and I was like psyching myself out about it. But would you recommend people, if they're not applying for loans or opening credit cards or kind of utilizing that credit, should they put a freeze on it, or is there a lot of importance in doing that, or maybe not so much?
Gosh, I'm really a terrible credit person. I absolutely see the benefits in freezing it. At the same time, if some stranger wants to try and get something on my credit, like, good for you.
Right.
But gosh, if you're not utilizing, like if you know that for a while you're not going to be applying for anything, then I would say, okay, place the freeze. But so often members will be like, anybody can be submitting applications for loans and stuff, and then they don't hear back because, oh my gosh, my credit was frozen, so nothing ever went through. Or, you know, they do get something back and they're like, oh, it hasn't even fully processed because my credit's frozen.
Right.
So I feel like it's there and then you forget about it. And to me, that's more of a hassle than anything.
Right.
Also, I'm just a firm believer that my social is absolutely out there on the black web. And if you really want it that bad, then like you're going to figure out how to get it anyway. So I don't know. I don't really stress too much about that. I do feel like the older generation absolutely is like stickler for, oh my gosh, it needs to be frozen.
Right.
What if this fraudster wants to mess with it? And but I feel like as a millennial, I have never, like, I've been through so much trauma with credit and everything that it's just like, whatever.
You kind of not desensitized, but it's like not as big of a deal because you're not as psyched out over it.
And I think that's exactly it. I don't get like panicked. I don't like, I know what to do if that happens. Right. I know how to handle it. And in that instance, like, God forbid, your credit does get hacked and there's a line that was recently applied for that you did not do. All you have to do is reach out to the creditor and again, the credit bureau. And sometimes in that instance, you don't even have to reach out to the credit bureau because the creditor itself will do it, but it's real easy to get those resolved.
Right. That's good to know, just in case it ever does happen.
Absolutely.
And then can you kind of describe a soft pull of credit versus a hard pull and what kinds of situations you might see both?
For sure. So a soft pull is something that just gives like a brief overview of your credit. It does not affect your credit in any shape or form. It doesn't even show up on your credit report if you were to look for it.
Mm-hmm.
Typically, I would relate these soft pulls to like your like spammy credit card offers that you get in the mail, right? So like, oh, you're pre-approved, blah blah blah, and then you do the application, and it's like, just kidding, you know. So it's like that kind of situation.
Yeah.
So the soft pulls are just, honestly, they're not even used very often. There are some banks and credit unions that can operate on soft pulls, and that just gives you like a general overview of what they could potentially qualify you for.
Gotcha.
But to get an actual like pre-approved for this loan, that is going to be your hard credit pulls. And that is for any type of loan out there. And unfortunately, there is no way of telling like, yes, you will be approved, or no, we cannot approve you. This is what you could qualify for, or this is what you could do to improve things without that hard pull.
Gotcha. So either way, even if you are approved or not, it's going to affect, or not affect, but it's going to have that hard pull that might like drop your credit score a few points.
Yes. So generally speaking, the hard credit pull drops 5 to 10 points.
Gotcha.
It does take about 2 months. Generally it's 30 days, but sometimes it's a little bit longer for your credit to like rebuild itself from that. While denials don't really affect your credit report, they do still affect your credit report. So if you feel like your credit is low, and you're like, I don't know if I'm going to be approved for this, I would not recommend doing anything that has a hard pull.
Gotcha. All right, we're wrapping up here. So lastly, are there any kind of myths or misconceptions about credit that we could clear up for our viewers before we move on?
Credit is everything while being nothing at the same time. Like so often we buy into the hysteria of it, right? Like, oh my gosh, my credit is terrible. I'm like a trash person. I haven't been able to keep up with it, this, that, and the other. Like, that's how we get on ourselves. And that's not true. That just means that you hit hard times, and we just have to figure out how to build it back up.
Right.
As far as a myth or misconception about credit. So for the misconceptions, a lot of the time it's more along the lines of you need to eliminate all of this debt in order to build up your credit, or get more of this debt to build this up, that kind of thing. So that's a give or take. It's definitely a half and half, good, stable balance there. And to ensure that, as we talked about, you know, with establishing new credit, you definitely always want to keep your oldest credit lines, because those are the building frame essentially of your credit. So you don't want to eliminate those, because that's generally the first place people go.
Right.
And then the other myth that we also have talked about a little bit is paying off all the charge off, or all the collections, or all this, that, and the other. And while if they are still active accounts, you absolutely want to focus on them. But if they've been charged off, just let it go. Write it off as a, gosh, you know, that was just a terrible time in my life, and we're going to move forward from there. Because honestly, getting that new credit, like said, on there and having good payment history on that is going to do far more wonders for you than paying off an old debt that was charged off.
Right. For charged off accounts, can you just like describe those a little bit? Because I don't know if I fully grasp like what that is.
Yeah, so a charged off account is whenever generally speaking, the account has been over 180 days old. They've attempted all collection aspects. They've tried to work out, well, if they've connected with you, then they've tried to work out a payment plan, or maybe restructuring your loan itself, stuff like that, trying to work with you to find a payment that will help you to basically continue removing the loan itself from the bad side and putting it back to the positive.
Gotcha.
If you have not been able to be connected with one of the representatives in collections, or if the account goes over 180 days and no response, then at that point it's looked at for charge off. And you know, that's whenever you'll encounter your repos and possible foreclosures, stuff like that.
Gotcha. Okay, that makes sense.
So yeah, it's just anything that has a balance and has not been able to be collected on for X amount of time.
I've heard that medical debt is usually what makes up that portion of
a lot of times.
But so are those still charged off? even though it's not counted as like
Yeah, so
credit anymore?
obviously medical debt does still exist.
Right, yeah.
But thankfully, we as creditors and lenders, we can no longer look at that as a negative impact, because
Right.
that was a time whenever you like had an emergency situation and that was out of your control.
Yeah,
You
of
weren't
course.
planning to spend like $5,000 at the hospital.
Yeah, of course.
So yeah, those are just unfortunate accounts at this time.
Yeah.
But
Mhm.
obviously, if you're in debt with like your actual everyday doctor, I would recommend making those payments. But as
Mhm.
far as ER visits and this and that and the other,
Mhm.
I mean, it's up to you what you do.
Right, of course. Yeah, but it's good to know that people don't have to really be scared of that anymore if they're, you know,
For
trying to
sure.
buy a car to be able to go places or, you know, get a house or anything like that.
Absolutely.
Mhm.
And that's like a huge debt that's always looming over everybody.
Yeah, of course.
So.
Everybody's heads. Mhm. All right, well, thank you, Miah, for joining me for this segment of Signal Sips and spilling the tea on all things credit. And thank you, everybody, for watching. Once again, I'm Dorian,
I'm Miah.
and I'll see you all next time.